Disclaimer: this video is for educational and informational purposes only. It is not financial advice. High return ETFs come with high risk, high volatility, and the possibility of significant losses. Always do your own research or speak with a licensed financial professional before investing. Welcome back to Money Mindset. Today we're diving into a topic that everyone loves to see, but very few people fully understand: the top 5 ETFs with the highest returns over the last 5 years. These ETFs have produced incredible gains, in some cases rising well over 200% or even 300%. But before we explore them, remember something important. Extraordinary returns never come without extraordinary risk. These are not stable, slow-growth index funds. They are highly volatile, highly thematic, and often driven by global events, speculation, commodities, or macro trends that can change quickly. If you choose to invest in any of these, you must be prepared for both the upside and the downside. Let us begin at the top with one of the biggest winners, the Global X Uranium ETF, ticker URA. Over the last 5 years, URA has climbed more than 300%, riding the wave of the so-called nuclear renaissance. Governments worldwide have been reassessing nuclear energy as a clean alternative to fossil fuels. This renewed demand has pushed uranium prices up, and uranium miners have benefited massively. URA gives investors broad exposure to the uranium sector, but because it's tied to commodity prices and political decisions about energy, it's extremely sensitive to news cycles, regulation, and sentiment. A change in nuclear policy or a fall in uranium prices could hit this ETF hard. Next comes URNM, the Sprott Uranium Miners ETF, which has also gained more than 300% in 5 years. While URA holds a broader mix of uranium-related companies, URNM focuses heavily on pure mining businesses, which are more volatile and often more speculative. Mining companies face operational risks, exploration delays, regulatory approvals, geopolitical instability, and massive upfront costs. When uranium prices rise, they outperform dramatically. But when prices fall, they're often the first to sink. URNM has delivered incredible results, but it is not for the faint-hearted. Number 3 on the list is GBTC, the Grayscale Bitcoin Trust. This one is different because it's not technically an ETF, it's a trust that holds Bitcoin. But its performance over the last 5 years puts it in the same conversation. GBTC has returned more than 300%, tracking the explosive growth of Bitcoin during its bull cycles. However, Bitcoin's price swings are legendary. It can rise 20% in a week and fall 30% the next. On top of that, GBTC historically traded at large premiums or discounts to the actual value of the Bitcoin it held, adding another layer of unpredictability. If you invest in GBTC, you're essentially taking on Bitcoin's extreme volatility plus the structural quirks of the trust. Fourth on the list is a ARGT, the Global XMSCI Argentina ETF. This ETF has delivered more than 260% over the past 5 years, driven by hopes of economic reform, political shift, and recovering markets. But Argentina is one of the most volatile economies on Earth. The country faces frequent recessions, inflation problems, debt restructuring, and unpredictable political cycles. ARGT is a pure emerging market bet, and that means high potential returns, but also high potential losses. A single headline can move this ETF sharply up or down. Finally, the 5th ETF in the top performers is FCG, the First Trust Natural Gas ETF, also up more than 260% in 5 years. Natural gas prices have risen due to global supply disruptions, energy transitions, and increased demand for cleaner burning fuels. Companies involved in natural gas exploration and production have benefited heavily, and FCG captures this trend. But commodity ETFs like this one are incredibly sensitive to seasonal consumption, geopolitical issues, weather patterns, and government policy. When gas prices fall, and they always do eventually, the ETF can drop sharply. These returns are impressive, but far from guaranteed going forward. Now let's pause for a moment and talk about the bigger picture. These ETFs are top performers because they exist in sectors that experience extraordinary cycles: nuclear energy, cryptocurrency, emerging markets, and natural gas. But no sector stays hot forever. Past performance doesn't predict future returns, and the fact that these ETFs deliver massive growth does not mean they will repeat it. If you decide to invest, pick them as small satellite positions, not as the core of your portfolio. Diversify, rebalance, and always understand the risks behind the reward. So those are the top 5 ETFs with the highest returns over the last 5 years. Aura, Uranium, GBTC, ARGT, and FCG. 5 big winners, 5 big risks. If you enjoyed this breakdown, hit like, subscribe, turn on notifications, and comment below. Would you invest in any of these ETFs, or are they too volatile for your taste? We post new financial videos every day to help you understand the world of money.